the term 21-22. Now I request CA Deepak Mandlecha ji to give us a piece of guidance and advice. Over to Deepak.
Thank you, Jitendra Bhai. Good morning, members, seniors in the profession, and our today's chief guest, CA Rajkumar Adukia ji, the Central Council member, and our today's guest speaker, CA Rammohan Bave ji. A very warm welcome to all of you on the today's first virtual CPE meeting for the financial year 22-23. Friends, today I'm speaking in the capacity of the past convener of this esteemed study circle. And before handing over the baton to the present convener and my elder brother, CA Jitendra Bhai Kothari, I would like to highlight the events and the activities which were conducted by our studies circle in the financial year 21-22. So there were certain highlights. So in the financial year 21-22, total 40 CP meetings were conducted, which nearly generated 86 CP hours. And out of the above total 40 CP meetings, 3 CP meetings were conducted in the physical mode, and as and when we got the opportunity. The topics which were covered in the meetings covered various topics in the fields of direct tax, then indirect tax, labor laws, blockchain technology, cryptocurrency, FEMA, transfer pricing, valuation, international taxation, then artificial intelligence, wealth creation through equity markets, then raising funds through SME IPOs, startup valuations, soft skills, bank branch audit, budget analysis, and so on and so forth. And during each and every meeting, we had an opportunity to invite the guest speakers from all over India. And in nearly 90% of our meetings, uh, all our guest speakers were outside Mumbai. So we were in a position to use this as an opportunity uh, uh, to to hear from the hidden talents outside Mumbai. And 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 in each and every meeting was attended by nearly 100 participants on an average, and sometimes even more than 200 participants. In the month of July, yes, yes, in the month of July, on 3rd July, we also conducted a free vaccination camp at Jamnabai Nursing School, Juhu, in association with Nanavati Hospital, and nearly 60 members and their family members and staff members took the benefit of the same. On 27th November, we conducted an investor awareness program at Raheja Classic Club in association with WIRC, and it was attended in large numbers by the members. So we also distributed free WIRC reference book to all the members in the month of June for their benefit. During the year, we managed to add nearly 25 new members in the study circle, and we generated an highest number of spot registration of nearly 250 spot registrations in the financial year 21-22. And I'm also happy to share that our YouTube channel, Andheri Oshiwara CP Study Circle, is having 324 members or subscribers, and all our meetings are hosted at the channel for the benefit of the public in general and for the members. So those members who could not attend the meeting, who could not attend the webinars, so immediately all our meetings are posted on the study circle platform, and nearly the members, and till date nearly 150 views on each and every webinar we have got till now. So it is a great response, and I also request all the members to spread in their network to subscribe to our channel. So during the year, we also received the certificate of appreciation from a WIRC during the convener and deputy convener meet at WIRC. And last year, as per the new CPE guidelines, we formed a new AOP on 26th June 2021, and we successfully completed all the compliances and formalities with the institute. On 24th September 2021, in the first physical meeting, it was attended by the president of our institute, C. Niyar Jambusariaji, the then chairman of WIRC, C. Manish Gadiaji, and it was attended in large numbers, and we had the opportunity to hear from both of them on that day. Friends, lastly, before handing over the baton, I would like to thank all the past conveners for guiding me in this amazing journey, my core team members for supporting me, and I would like to thank my team member, C. Jitendra Bhai Kotari. As an elder brother, he was always there to guide me, to support and to guide me. And I would like to specially thank C. Aditya Maheshwari, means my dear friend, who first introduced me to the study circle. अगर वो इंट्रोड्यूस ही नहीं करता तो मैं कन्वीनर ही नहीं बनता. So first I would like to thank him that he introduced me to the study circle and in this vibrant study circle, and he will always be the backbone of the study circle. Means always giving his unconditional support to the study circle. And I would also like to thank my then convener, C. Amish Sangoi. So under his convenership, he started the trend to call all the speakers from all over India, and he guided me very well, and I learned a lot from him. And last but not the least, to all the members. I mean, अगर members की वजह से मुझे convenership मिली, so I thank you very much all the members through their participation, through their guidance, through their everything. They supported me, and I thank you. And lastly, my best wishes to the new office bearers, Jitendra Bhai Kotari and CA Utkarsh Sharma, and I am sure under their leadership, our study circle AOSC will achieve the milestones and will achieve the greater heights. And lastly, if at all पूरे साल भर में कुछ गलती हो गई हो, कुछ हो गया हो, तो मैं क्षमा प्रार्थी हूँ. बहुत बहुत धन्यवाद. Thank you very much. Now I hand it over to Jitendra Bhai Kotari. Jitendra Bhai, over to you.
Thank you, Deepak, for such a guidance word and the highlighting all the activities of AOC for term 21-22. Now I request Aditya Maheshwari to start with ICAI motto.
So I request everyone to kindly keep their hands on their heart while you play the ICAI motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, Aditya. Now I welcome our today's chief guest, Sri Rajkumar ji Adukia ji, and request him to inauguration of today's first virtual CP meeting of AOSC. Sir.
Yes. Good morning to everyone, respected seniors, colleagues, and it is a great pleasure that I am here on the first study circle of the new activity year 2022-23. See this word study circle. That means you study in a circle. And I give the biggest importance to study circle. I qualified in May 83 exam. And when I started my practice in Kalba Devi in July 84, the first thing I did was we formed a Kalba Devi study circle. And from that moment, I'm so passionate about study circle, compared to conferences, seminars, because here we can ask any questions. We can ask Mr. Rammohan Bave, how you became Rammohan Bave? How you became passionate on valuation? That cannot happen in a seminar or a conference because of large number of participants. Secondly, like I was posting in the WhatsApp group, when we used to go to our school and college, the best method to learn is to study little bit before we go to the class, listen in the class, and also study after the class. Another theory in practice is whether knowledge first or work first. See, when we buy the product, when we go to shopping mall, we do window shopping, we go to different shops and then we select the product. Same thing applies in the areas of practice. Unless we have a little knowledge, what is valuation, how easy it is, how it looks like, we will not venture in that area. And I would like to recognize, those who gave me the hand-to-hand support in, expanding study circles. In 97, when I was the chairman of Western region, I got an opportunity and we may have started more than 100 study circles in every district of 3 states, Maharashtra, Gujarat, Goa. And now I am a CPE chairman and we have 5,600 talukas in India. We have 700 districts in India of 28 states and 8 union territories. You will see that within 3 months, we will have a study circle. We have 3 kind of things: study circle, study chapter, and study group. So there are multiple objectives, taking up state subjects, state laws, making every member as a thought leader. I posted this perhaps in our study circle also, my paper on Friday morning, because Friday and Saturday we have started doing webinars. 2 speakers we need on Friday and 2 on Saturday, and slowly we will have on every day. So there are 48 participants currently, including myself. The Zoom gives the statistics. And I want each one of us and also the other members who have not joined the Zoom to start with become a moderator, because the advantage of my convenership was now also I have enrolled all study circle as a paid member, including I have paid 20 to 23 fees of Andheri Oshiwara. We come to know who is the faculty. So if there is a work on that subject, we can phone that member. Similarly, we get PPT or some material on the subject. I take up a subject where my knowledge is 0. 1 month advance, 2 months advance. And then I start writing a book. Like, when valuation came, I prepared a book. how to pass valuation exam. There are other 2 books which I developed. Believe me, I want each one of you to experiment how easy it is to become a speaker, to become writer, and to develop a practice. See, anything, there was a person called Parkinson. He made a law. Work will expand as per the availability of time. And we have seen for audit, say bank audit, we have limited number of days, 2 days, 3 days. There are phones from journal office. We complete that audit in that period. Now, if 1 month is available, that work will take 1 month. Then there is another rule, 80-20. We may be very good in one area, but that cannot give more income. We need to have more areas. Maybe we add one area every 3 months. So when I started practice, I thought income tax and sales tax takes a lot of time. There are a lot of circulars, lot of amendments. So I said I will not do those 2 areas and expand all other areas. So today's topic is valuation. Very, very interesting topic. And I do a memory approach. Like there are 3 approaches in valuation. I have created an acronym AIM. Asset approach, Rammohan ji, income approach, and market approach. So you have AIM and you know what are the 3 approaches. Similarly, say value, FIM, fair value, intrinsic value, and market value. So I have posted some material in the WhatsApp group because there is an International Valuation Standard Council. There is another London-based RICS, which comes out with a red book. Then there is a green book. Institute has made valuation standards. There is an exam, which is, I'll just share my screen. Rammohan ji, I'll take 5 minutes and then see this IBBI.
Take as much time, sir.
Conducts the valuation exam. Yeah. Thank you, sir. So so those who want to give a registered valuer exam, there is a new syllabus which is coming from first. This is in the examination, valuation exam. And like I have given, there are 16 registered RVOs. There are 4,600 registered valuers. And it is classified into 3 categories. And it's very simple. I would request each one of you, and we can have, in registered valuers, we can have a company where, all those 3 those who are eligible, they become directors and we give the valuation report. So there are 63 entities, LLP or a private limited company. So it's a very, very interesting subject. And any area, any subject, I personally feel do not take more than maybe 240 hours. If we take 30 days, 8 hours every day, will make you more than a reasonable expert on that subject. Any question, I would like to answer 1 or 2 questions if any member want to ask me, because that will give me an opportunity to elaborate how to go about. You can unmute yourself and ask question, or you can put in the chat box. Because CPE committee, there are other 3 committees which I am heading, how to make the firm as a global firm, Indian firm. So we will be doing a webinar every week, what are the tools we will be doing for a member in service, how to become CEO, and member in practice, how to expand practice. Deepak, you are in mute. Do you want to say something? Or any member?
Deepak,
Any member want to ask can raise their hands. I will unmute. Podarji wants to go first.
Yeah. Rajesh ji, go ahead.
Good morning, sir. Sir, you are a chairman in various association, independent directors, CCM. How do you do time management, sir? How you are able to manage so many things? So my
मेरे
question is,
YouTube चैनल पे मैंने एक वीडियो बनाया था चुनाव के समय, अनलिमिटेड टाइम, like this election after serving 18 years, again the passion arose, I want to be here. So time is in the mind. If I want to make 240 hours, I should create another 9 Rajkumars. Dineshji Agarwal stays in my, I stay in his complex. So we have a time for yoga, we have a time for walk, we have a time for family get together. Plus, so a self should be always enthusiastic. The emotion management, the time management, everything comes automatically. राजेश, एक वीक मेरे साथ में काम करो, कोई किताब लिखो, स्पीकर बनो, तो अपने आप पता चलेगा कि टाइम कैसे आती है.
ये सब चीजें सर मैंने आपको क्लोजली देखा एकदम.
हाँ दिनेश जी.
और एक चीज सर मैं आपसे पूछना चाहूंगा.
2 स्टेंट लगे हैं 3-4 दिन पहले, लेकिन कल शाम को इनसे मिला, अभी आज वेबिनार में है.
Sir, I just wanted to ask how you become Rajkumar Adukia.
Yes, a very good question, Dinesh, because your family has seen me from the day, when I was doing CA. When I did graduation, I come from a very rich family. Very, very rich family where my father was Munimji, 8th standard pass, his salary maybe 500, 600 rupees. When he died in 87, his salary was 1300 rupees. But when I became graduate from Sydenham College, who is who of the college, the industry was there, like Uday Kotak ji was 1 year senior to me, Ajay Piramal ji was there for a few years back. So I dreamed that in a law bookshop, the good professional, only my book should be there. There should be Rajkumar Adukia written in each book. And on the backside, half of the book has a Rajkumar Adukia name. Then I wanted a doctor should be in my name. Then I dreamt at that point of time that I should go to every country of this planet. So today I have visited more than 100 countries. Maybe in another 10 years, I will add to another 50 countries. To answer your query, you ask universe. Now, I have an affirmation book every day. I have written, I earn 10,000 crore every day. So you will have that. If you can see, it will not be that visible. So it's a different technology. To walk on the road and we will get the direction, we will get the way.
Thank you, sir.
So that is, so don't put any boundary when you dream, when you have your goal. Like a movie, how a movie is written, the script writer writes a movie script. There is an actor and there is a director. Our movie, we have to ourselves, we have to write. So I have written my climax. I will be president of India, not ICAI. ICAI will happen. And Prime Minister of India. So we have to write our climax. We ourselves are a director.
Correct.
And we ourselves are an actor. So only one person plays many roles. And with all humbleness, I am telling, without exaggeration, it happens. And I want challenges. Somebody telling me कि sir ये नहीं होता है. Then that person has to work with me for 1 week, 1 month.
That's correct.
Any last question, anyone? More question, and you can have unlimited question on my phone or email, WhatsApp.
Thank you, sir.
Some people know me for many, like I know Mr. Rammohan Bave maybe as soon as I became the member. In some seminar here, there, 83, 84.
Hello.
Any quick question? Otherwise, we can listen to Rammohan Sahab.
Yes, sir.
One more
Thank
question.
you, your kind words, sir.
Yeah, okay.
And
Jitendra, let us.
it's always motivational thing. Now, I request to Aditya Maheshwari to give a brief introduction of Shri Rammohan Bave ji. He is the mentor and he is the master of IFRS, valuation, index. So a brief introduction from Aditya Maheshwari.
Yeah, good morning all. Wish you everyone a very happy Ram Navami. So today's topic is startup valuation, and who better than Rammohan Bave, CSR we have here. His brief profile is he's a CA, CS, CMA, LLB. He's all the Linker record holder for the IFRS webinar seminars for the longest hours he has spent. So he recently he has been awarded ED Tech Entrepreneurship Award. He has 30 years of experience in the industry and 12 years as faculty, mentor and consultant. So total he has 42 years in experience in the industry and as a consultant. So it's very good to hear from him. And he has worked in 7 countries, including Reliance Mukesh Ambani Group, Mittal Group at London, and Chanderiya Group in USA. So he has students in 31 countries and 131 cities for IFRS and valuation courses. He's a president Association of Valuation Professionals and an independent director in 2 companies. He's always interested in new avenues and interaction with investors. And his hobbies include squash, swimming, and chess. So with this brief introduction, I would like to hand over the proceedings to CA. Yeah, sir, the mic is yours.
Thank you. Thank you, Jitendra ji. Thank you, Aditya ji. Thank you, Deepak ji. And thank you, Rajkumar ji. And above all the audience, because if you are not there, none of us have any work to do. Having said that, happy Ram Navami to all of you. And I will straight away proceed with the presentation and the discussion over it. Let the discussion is as much interactive as possible. And if anybody has any query, please feel free to unmute yourself and share the query. Or you can write in the chat box. The only request is let the query be short as much as possible and not a long descriptive query. Long descriptive queries I will take offline. So startup valuation, like just now it was said that you can be doing great in practice, or you can be great in book writing, or you can be great in your speeches. But I would look for every chartered accountant here, and it should start with Andheri Oshiwara, because they are always flag bearers, to start a startup itself. So why are we thinking of traditional ways of earning money, of practicing or writing books or giving speeches, or getting into even consultant in IFRS and valuation? Rather, I'll say go one step ahead and become a startup entrepreneur. I am currently on that journey. I am sure we will, we will certainly have many startup entrepreneurs from this study circle over a period. Yeah. All right. So I'll move to my presentation. Right. Are you able to see my presentation? Somebody please
Yes, sir. Yes, sir.
Okay, great. So today's subject is startup valuation, and thanks to Andheri Oshiwara Study Circle. It's a privilege to be with Andheri Oshiwara Study Circle because it is supposed to be one of the very highly, or why one of the highest recognized study circle. And I am also given to understand that one of the study circle which is richest among all the study circles. So that information I gathered from CA Institute. Okay, so naturally, because Andheri is the houses itself are not in the control of any common CA. So Jitenderji, I know that I am here with a lot of rich people, and I'm sure they will all start startups of their own and become billionaires from billionaires. And I'm talking in dollars. So the convener ji, Jitendra ji, thank you. This is my phone number and this is my website name. My phone is available always, but mostly on WhatsApp because most of the times I'm giving lectures. Around 200 to 250 days in a year, I give the lectures. If somebody is on not on mute, then please can you make him mute because we are getting some disturbance. Yeah, thank you. My name is Rammohan Bave, and very recently we won the award called EduTech Entrepreneur Award. Okay, so I'll send you the copy. I think I've sent a copy to some of you. We are also LIBCA record holders, and obviously other introduction has been already done. CA of 1980, obviously, to be honest, is outdated because the CA syllabus has changed so much that I don't think if I appear again, I won't dare to appear again. Okay, so I'm a CEO of 1980. 80 to 2010, I was in industry and worked in 7 countries and 7 employers. And last 12 years, I'm a faculty and consultant. IFRS, Index, Valuation and Startup Advisory. In fact, we have done the valuations of Ola Cabs and Pharma Easy to give the 2 major names who have become unicorns. And our own EduTech is also on, where we believe that only premium trainings like IFRS, valuations, and others are getting unfolded. This is my website. Anybody wants knowledge, go through these videos. And if you click on this presentation I'll be sharing, so you can directly click on the presentation and learn as much as you want. Because in last 12 years, I have given 2,800 lectures. These are the awards and accolades. We talked about it. LIBCA 2011, EdTech Entrepreneur 2022, Global Record and Research 20, Asia Pacific 21, and Flag Bearer of the Profession Award, ICAIs. This is something already explained to you. I'm also training RBI, SBI, IBBI, Ecotimes, Indian Merchant Chamber, NIBM, Comptroller and Auditor General, BSc, and LIC. I happen to be an independent director in LIC Mutual Fund. These are my stints. I will skip my introduction now because I have already spoken. If somebody wants to come to my place, they are welcome. Here is the Google map. You can click that and simply take a Ola and come down straight away, anytime. And I have 43,000 friends in Facebook and 83,000 connections in LinkedIn. You are welcome to join that. All right, I'll skip here. Anybody wants to go through the specific startup lectures, they can go through this panel discussions and webinar on startup valuation, stock options, and they have been made in a very, very simple language, unicorn and aggregators. All right. So now we are to the subject. Okay. And I believe an interactive lecture. So any point of time you want to ask a question, unmute and ask. That is not an issue. Okay. Yeah. This is my contribution to valuation profession. I was lucky to be the person who created the question papers for the registered valuer exam. Because in February 18, suddenly IBBI called me and said that we are starting RV exam as per new company act. Please come and prepare the MCQ question. So I was lucky to do the questions. Of course, I had to give them along with answers. So around 2,000 questions we created. And after that, then I created the material for ICSI also. For IBBI also, I kept the material, created the material. And obviously 250 full day trainings we have held. Of late, we are holding a lot of trainings to corporates also on valuation. And many of the startup are taking trainings from us as well as advisory. All right. Why? What is the beauty in startups? And you find it funny. First of all, there is no records available. Okay. There is no record available. You tell him, show the voucher, the startup entrepreneur gets confused. He says, what is voucher? I don't know what is voucher. So we say, then what do you have? He says, I have an idea. Okay. So a person like us who is a chartered accountant, who gets shocked to hear that there are no vouchers. Okay, a business is going on, but he says, I have no vouchers, no records. Even there are employees who have not been issued appointment letter, but they know that they have been promised employee stock options and these will be worth in billions. I was shocked to see that. One of the days, one entrepreneur called me, I won't take the name. He called me and said that, Mr. Bave, I think our auditor is asking balance sheet for employee stock options treatment. I said, okay, give me the grant letters. He said, we don't have grant letters. Then I asked him, at least tell me who have been allotted the stock options. He said, we have some rough list. I said, come on, I mean, if in the appointment, what about the employee's appointment letter? He said, no, that also had to be prepared. So first of all, we sat with HR and got the appointment letter, grant letters, everything done. No or peanuts revenue. Revenue means sales. Peanuts means negligible. Okay. And there are losses and losses and losses. Okay. Then it's a non-public entity. They are like mushrooms. You know, you go to Powai or you go to Koparkharane and Sanpada, you will find a huge number of startups. On every floor, there are at least 10 startups. And ESOPs are issued even without a scheme. Okay. And they claim values like anything, and investments are illiquid. Okay. So therefore, it is very difficult to value a startup. They are not publicly listed. They do not make steady sales. Then, broadly speaking, any valuation goes by 2-3 phenomena. One is going concern value, one is liquidation value, and market value. Right now, we will not discuss liquidation value. This is suitable only for those organizations where the startup did not succeed and had to be closed. But we are going to talk about a startup which gets funded, becomes unicorn, and how it goes further. And as far as market value is concerned, is also a rare approach because you will rarely find a listed startup. But of late, we are all aware that some of the issues like Zomato, Paytm, they have done marks, or Nykaa, okay, they have done marks with the valuation. And those valuations, those who have studied, they will really realize how the valuations are taking place. Okay. The going concern valuations, therefore, we will talk about. But what is meant by going concern? Going concern essentially presume that your business will be long term. Now, business will be long term, you will have to be cash successful. And here are startups who are year after year, are not having the cash flows. Their net, I think most of them have is outflow only, no inflow literally. So if you take Byju's, 8 years it was bleeding. If you take Zomato and Swiggy, they were bleeding for 5 years. If you take PharmaEasy or 1mg, okay, they were bleeding for many years. Ola Cabs, it was bleeding for many years. Okay. So we'll skip liquidation value, as I said, and we'll also skip market value. You will be getting this presentation. Let us take a study of trade. Okay. Whenever you are valuing a startup, what is the first thing you should find? What is the pain point? Okay. What is the pain point? So CRED looked at the pain point. What is the pain point they looked at? They said that banks are issuing cards without any interest charge for the credit period, the normal credit period of 1 month. How can bank afford to have so much money locked up without earning any interest? when their business model itself is based on the interest. And then if you study that at least 20 to 30% of the cardholders are defaulting. And once defaulted, the interest is super. 1.5%, 2%, 3%, and like mad. And if you have American Express card, you're finished. Okay. With due respects to American Express card, because it is usable everywhere in the premium places. Okay. So having said that, the interesting part is when you have a pain point with the millions of cardholders, the pain point is what? The fear of getting charged a very high interest. Now what happens? Citibank has issued card, ICAI has issued card, HDFC has issued card. I'm taking the top 3 names, and SBI has issued the cards. Now, of course, Citi's business is being taken over by Axis. Okay, so I'll put Axis. Right? So Citi, ICICI, HDFC, and State Bank. Now, these 4 banks have highest number of cards, but even if you take all, what is CRED trying to do? Aggregation of pains. Means aggregation of credit card holders and telling them, look, route your payment through us and we will ensure that you are charged only 1.5% and not 2 or 3 or 4%. Now the person is happy. He says that, look, I don't have to pay penal interest, so I will route all my payments through credit. Okay. How then credit survives? Because they are always bearing the loss, 3 minus 1.5. Can anybody tell me how will credit make a profit at all? Any thoughts? Any thoughts? And plus bad debts, if any. Can you tell me any thoughts? If not, then we'll have to go into the details of credit. How credit will make money? Now the point is, we all know that individual bank has a data bank of their own customers. Now credit has the data bank of all the customers. So to them, what do you sell? You sell advertisements or you sell the data and then you make money. So there are investors who have put in the money and these people have already become a unicorn, and then they had 6 rounds already done, okay, and already funded by 28 investors. That is the value of so-called, what should we say, intangible assets. What are the intangible assets? Data bank. The biggest is data bank, and aggregation of pain points and getting the data bank, or create an asset called customer relationship is the biggest advantage which is encashed by credit. All right. Then we talk about the simple principle. Post-money valuation should be equal to pre-money plus investment required. Okay. But what is the investment required? Like Adukia ji said, M, asset model, that is cost model, income model, that is DCF model, and market model, that is market approach. Okay. Now, in case of startup, however, the new methods have been evolving. So I will be taking the new methods, and since my time is up to 12 o'clock, the last half an hour, I will discuss one actual case study where I was participating as an employee. Are you all able to hear me? Is my voice?
Yes, sir. You can extend 15 minutes, sir.
Okay.
Because
okay.
we have taken 15 minutes from you.
Not a problem. I understand. So, scorecard method, Burke's method, risk factor summation method, venture capital method, ownership method, first Chicago method, comparable method, discounted cash flow method, cost to duplicate method, and book value method. We must know 10 methods of startup valuation. If we are not aware of that, I don't think one can really do a startup valuation. Now you will wonder, was this in my CA syllabus? Certainly not. Has it come into the latest CA syllabus? A very little bit, 1% of what is required. Then how do we study it? And that is where Andheri Oshiwara circle and many other study circles have played a very important role. In fact, this must be my 31 or 32nd lecture on startup valuations, because many of the CPE study circles have already heard that. In fact, last week I spoke at Kolkata and Bhubaneswar. It was Kolkata was a physical meeting, and this was a startup lecture only. And there is a huge awakening and demand for the startup lectures. And any of you feel to know more, do get in touch with me. I have put my digital card into the chat box. Okay. Now, these 10 methods have they come into valuation standard created by ICAI, or are they the part of international valuation standards? Interestingly, not at the moment. So this is an upcoming knowledge, and rightly said by many, whether it is Jatinder ji or Adukia ji or anybody else, that any latest knowledge, if you are up to date, then you are ahead of the lot. And as far as startup is concerned, there is a time, because they are already what you call the valuation firms, which are supposed to be big 4 or top 10 valuation firms like Duff and Phelps, Renaissance, etc. They are already ahead with this. So we all have to catch up and see that this valuation area, especially startup valuation area, which is, what should I say? Don't say that a cow which will produce a lot of milk, but if we want our bread and butter, we do traditional practice. We want bread, butter along with jam and cherries, then get into startup valuation. And you want bread, butter, jam, cherries, and plus, then create your own startup. All right. Now I will be discussing scorecard method, Burke's method, risk factor summation method, venture capital method. I won't discuss ownership method because it is very close to asset model, and which is a generic one. I won't be discussing discounted cash flow model because this is the income model traditionally used by all chartered accountants. And also, this is applicable to a startup in the third stage. So we are going to study the startup when we are in the first and second stage. First stage of startup is zero revenue, and second stage of startup is mini school revenue, just started revenue. And I'm not going to discuss with book value method also, because this is also an asset model, and cost to duplicate is like a replacement cost. So this also I'm not going to discuss. Okay. So I'll be discussing first Chicago method, comparable method, scorecard method, Burke's risk factor summation, and venture capital. These 6 methods are something which people are not regularly familiar. I am sure, of course, some of you must be already doing startup valuations or in the valuation practice. So I will invite you to chat any of the important points even you would like to add. Okay. So let's talk about the scorecard method. So the other startups in the same vertical is to be found out. For example, when we were doing Ola Cabs valuation, we found that we have Uber to compare, but Uber was in USA that time, yet to come to India. Nevertheless, the USA situation replicated to Indian situation with the differences in the factor could be one base for doing the scorecard valuation. We also had something called as Meru, but Meru was not as much digitized as much Ola was planning to be. So again, Meru's valuation we could take with some kind of a variables to be considered. And even there was a red bus, which is popular in many cities, especially I have seen it in Coimbatore. Okay. There also the valuation, we could trace out some kind of figures available. So one has to really take the other startups. Sometimes the getting data is a very difficult thing. I have 2 bright MBAs who are excellent at Google search. In fact, they are able to find out any information. Okay, I am sure they have taught me a lot, and I'm sure they will start their own consulting or join the top 10 firms because I cannot afford them compared to their skills. Okay, coming back to the other startups, let us talk about another valuation done by us, that is Pharma Easy. Pharma Easy is in, what do you say, Pharma Tech. That is, again, in India, most of the startups are, what do you call it, as aggregators. Okay, aggregators. Why aggregator startups are succeeding in India? Point number one, they are service industry models. They are really not investing into tangible assets. They don't have high investment except for software and business development expenses. And what are the strengths of India? High population. High population. Now, high population makes a major model, whether it is telecom or internet or cable industry or pharma industry or Zomato and Swiggy of this world. Why Zomato and Swiggy are most successful? Simple answer. Roti, kapda or makan. Okay. Of course, roti, kapda, makan and mobile now. But roti is required by everybody, and therefore Swiggy and Zomato lead the, even in Corona. In fact, Swiggy and Zomato actually tripled their turnover. Okay. And why Nykaa? Kapda. And now Makan, you will see Makan also soon. Okay. Because there are companies. In the meantime, the logistic industry also has grown in the process. And therefore, you will see there are, the aggregators are creating a lot of employments also. So that is another thing which is getting recognized in India. So the Indian startups, most of them, I think we have reached almost 100. 100 unicorns, I'm saying. 100 unicorns now have become mostly aggregators and are able to take the advantage of high population, particularly the middle class, which is in last 10 to 20 years, the middle class has increased from 30 to 60 crores. Okay. All right. Now here is a scorecard valuation methods. What we should do is we should compare our company with the target company. I want to achieve a certain company as target. I will give an example of Pharma Easy comparing themselves with 1mg. Now we said these are the factors which we can cover, and decided to give a weightage to each of the factor. Okay. So when we said founders, we found that in Pharma Easy, the Dhaval Shah, the entrepreneur, very dynamic, succeeded in convincing Tatas to buy their shares. Okay, to buy their shares. Of course, Tatas later on acquired as good as 1mg, so that became a bigger one. But originally, it was Pharma Easy which succeeded in getting Tatas on becoming a shareholder of Pharma Easy. Now, how would you publish such a news? Because every brand management has to show off. So how did they say? Tata's on board with Pharma Easy. On board with Pharma Easy. Now this will give you an impression that on board means as a board of directors. But English language is very funny. On board means you can be shareholder also. Or you could have entered Pharma Easy also. Okay. So based on that, everybody started thinking that, great, I think that's a super achievement. Okay. Pre-money, Soundarji, we will be coming soon to that. So not a problem. Okay. Then market size. I'll give an example here. When Ola Cabs acquired Taxi for Sure, that was the valuation we did. 1100 crores were paid to the promoters of Taxi for Sure. And Taxi for Sure net worth was negative 46 crores. Mind well, negative 46 crores. Why would somebody pay 1100 crores? And is it going to be recovered? And when? That's the question. But you have to look at the cost to duplicate. Okay, so there we use the cost to duplicate method and also check the market size. For example, the Bangalore, Hyderabad and Chennai, the three places where taxi for sure was commuting or working, had more than 40% market share. And if Ola was to acquire that market share or fight in the market to get that market share, the amount of cost they would have spent would have been far, far higher. So when compared to the target company, for those cities, the market size of Ola was lower than the taxi for sure's market share. Then we come to product. What is the product you are selling? Is it logistics service? Is it aggregation? Is it innovation? What are you are producing? So when I say product includes service. Okay, it's not necessarily manufacturing. In fact, you take the top 10 unicorns, hardly anybody is producing their own items. Okay, and now I'm not getting into something called as Amazon or Flipkart, such kind of things. They are world level, global level, so their valuations are quite complex and get determined by many factors. There are Damodaran like people who are the god of valuation to do that. We will focus where our bread and butter is there. Then competition. One has to look at the competition. How are we placed compared to the competition? Then business plan and then customer reference. Okay. So do we have a strong business plan? So if you go as a valuer to any startup valuation, take all these 7 parameters, and if there are any other parameters also. Okay. If there are any other parameters also, take those parameters and try to study where do you stand. Okay. Try to study where do you stand. And try to do a benchmarking. And presuming that the pre-money valuation is 10 crores for a company, then the post-money valuation pre-money valuation of our company will be 10.75 by taking the multiplier factor. Before going to the next method, I would like to ask whether you have any questions on scorecard valuation method, because considering the time limit and even with 15 minutes extra, I am going to barely finish because startup is not a small subject. Okay. So anybody has any questions? Yes, Punitji, oh my God. Punitji, your questions are bound to be tough, but go ahead.
Sir, just wanted to know what is the, how do you explain this percentage? Like for founders, it's 30 versus 125. So how does this 30 and 125 really get derived?
Okay, let me put it this way. This is the weightage you are giving out of 100. The total of this is 100. Okay. So now it may be different. For example, when scorecard valuation method was originally devised in USA, the founders used to have a lot of importance because of their image. They were able to get the funding. So founders used to have high value. Now in India, whenever there are IIT, IIM founders, their name quite a lot is catchy. So therefore the founders can, or if somebody is going to support you, for example, if you have somebody like Puneet Gupta as a founder member on the board of advisors or something, then you have a higher weightage to that. But you have to decide how the overall valuation depends. So this of course is subjective, but you will have to revise and benchmark and see. So these weightages are derived. Now, target company, if Ola is taking Uber, then compared to Uber, are we better placed? Then we are 125%. So our valuation is higher. In market, suppose we are higher than Uber, then we are taking more, like that. So this is the percentage in relation with the competing company or comparable company whose scorecard is active, and each of the model, how much you give the weightage. I hope I am clear, Puniji. Hello, Puniji, is that clear? Maybe he's on mute. All right.
It's quite clear now.
Okay.
Thank you.
Great. My pleasure. I suppose you are attending from Hong Kong, is that? All right. So we will move to the next method. Okay. Santoshi, if you're not clear, I'll give you an example. For example, Pharma is the founder, Dhaval Shah, and 1mg's founder. Okay. How much will that impact the Pharmatech valuation? That is what decides. Okay. So founder structure, how much it will contribute in growing the business. So you'll have to decide on that. In some business, there may not be a competition at all. For example, somebody is recently we valued it. Somebody is coming as a machine. Okay, coming with a machine which can stop the gases creating corona. So now there is hardly any competition currently. So he may give 0% weightage for competition. Okay. In some businesses, there may not be partnerships required. But if you take Uber has done the partnership and taken over a food giant and done Uber Eats. Or Pharma has taken over Thyrocare. Now partnership has a lot of value in terms of the scorecard.
Right, sir. I agree with you, sir. Now.
Yeah. Good. Thank you.
Now I agree.
Yeah. Thank you. All right. Then we go next. Right. Dave Burke's method. Now this is a very interesting method. Okay. Dave Burke has taken similar things, but as a characteristics. Okay. And he is saying that, look, you should do the valuation of those individual items. Okay. So can you value intangible assets like value proposition? Can you value a prototype? Can you value the quality of board? So do the valuation of that and check how much US dollar valuation or Indian valuation you are getting. So I have done this. Burke has done in US dollars. We have done it in rupees for our understanding. And therefore, when you have a zero as a method, and the quality of target company should be considered in light of the characteristics. Okay. So now Burke doesn't make it compulsory that you use these 5 items only. But it says that, for example, I'll give you a direct to the point example. I am Bhavish Agarwal, owner of Ola Cabs. Okay, we used to have a lot of meetings with him. He will say, Mr. Bhave, let us calculate if I want my web app to be downloaded in the city of Chennai by 30 lakhs people. What is my cost? Are you with me? What is my cost? I said, you'll have to appoint the business development managers, plus you'll have to make the software attractive and their salaries, etc. And then you'll advertise on Google or anywhere and spend manpower to advertise your web app, or you may need a TV web app, a TV advertisement. And based on that, your 30 lakhs will get gathered. So the zero-based budgeting for that. In fact, we have all studied zero-based budgeting. I always feel that the zero-based costing calculation which you have started is very much useful and similar concept for startup valuations. Okay. Sundar Rajanji, actually, whenever we use the methods, as far as I am concerned, I have used some methods more and some methods less, obviously. So I will take a specific example at the end where application of the live experience you will get it. Okay. Now, for example, quality of board or advisor. When we started our EduTech, okay, I'll tell you, we have advisors from Germany and Canada. Okay. So now that quality is helping us because their brand reputation is very high. Now, product rollout, for example, Geo Fiber, when it came, they are saying, or you take Zomato. Zomato, if you are using the beta version of the software, which is for testing, then you get some brownie points. So now product rollout can lead to some of the investments. Identify friendly customers and tell them to test it out. You are spending money on that. So that way, how much cost will be incurred, come to that as a pre-money valuation. And I think the expectation seems to be quite high from Sundar Rajan. Now Jitendra ji may have to get 5 sessions for each of the method. All right. Okay. Then risk factor summation method. What are the risks in business? Management risk, stage of business risk, legal or political risk, manufacturing risk, sales and marketing risk, funding and capital raising risk. Okay. So let me take some of the actual examples. You have studied Swiggy and Zomato. Why do they succeed? Because today, if I want to eat dal dhokli or dal bati from a Marwadi shop in Vile Parle or Andheri, and I am staying in Sion, how do I afford it? And if I phone that guy and say, please courier to me, he will say, unless your order is 1,000 rupee plus, we don't deliver. But today, you tell Zomato, even 20 rupee chai, they will still deliver. How do they benefit still? They do aggregation of deliveries. Okay. So now what has happened is that the dine-in versus takeaway have become competition to each other. Okay. And I will tell you, we had a hotel called Sauli, a very middle class Udupi hotel, but you get an excellent Uttapa there. That guy will never give me, though 1 kilometer away from us. And I was not able to go because Mumbai heat is very high. Now today, after Swiggy, Zomato, his turnover has increased 6 times. So if you see Zomato's valuation, though we have not done this valuation, we know the details of the valuation, and therefore you have to see the competition risk. Okay. Then I will tell you a case of Swiggy and Zomato when it came up. There is another case which came up. I am not sure whether you are aware. There was a company called HomeTiffin.com. Now, what is HomeTiffin.com? That if some household lady is creating tiffins, HomeTiffin.com will have a tie-up agreement with her, and customers will come to HomeTiffin.com's website and they will order that. When they will order that, that lady will provide it. So you become a midpoint, giving both the benefits of both the worlds. One, what Dabbawala were giving, Dabbawala were giving home tiffins. Okay. And Swiggy and Zomato is giving these things. But this company did face a problem. Why? Because when you get a dabba from your own home, you cannot complain if there is any problem with the food. But when you get a home tiffin from any other household lady, who will take guarantee of their quality, their hygiene? And that is done by, I'm sure you must be knowing, FSSAI. FSSAI registration. Now, believe me, this FSSAI registration doing out for every household lady supplying tiffins is virtually impossible, and therefore home tiffin faced the legal challenges and they had to be closed. So sometimes the risk factor, one risk factor can kill the whole startup. I remember we were trying to, I had to take objection, but home tiffin has to be closed because of the FSSAI registration problems. Now, how is Swiggy managing? If you study Swiggy Genie, what is Swiggy Genie? Swiggy says we are only courier. You go to Swiggy Genie, give the address from, address to, deliver. We have no responsibility of the food. Okay, you chose the location. So therefore, there then the business only increases by reference framework. So that gives the side added value. Take the management risk. Okay, one of the famous entrepreneur, I won't take the name, he was on the board of one of the startups. And one day, a big fraud of shell companies came out for that particular person. And then now it is all fallen deity, what you can say. Yeah, Surajji, I will share with you the Zomato's business model so that you will get an idea how to make the model, how Zomato makes to make the model profitable. Okay, because you will have to see Byju's, after 8 years it has become profitable. And secondly, you have a lot of other sources of income. Okay, because when you give discount, you obviously have lot of tie-ups which make you the money, but we'll come to that. Then we have sometimes a funding risk. I mean, that risk was faced by some of the startup entrepreneurs. I know one startup entrepreneur who just want 10 lakhs, but the people who are investing saying we want a project which is at least 20. Then technology risk. There are at least 10 medium-sized pharma companies who took a risk of trying to develop the vaccine for corona, but their R&D failed. So then they lost. So the technology risk can kill some of the this thing. And you know the story of ICAI. Okay, so the reputational risk or Yes Bank, ICICI and Yes Bank faced a lot of reputational risk, and there some of the businesses got curtailed. And in fact, from that time, they really were investing in startups that was reduced. All right. Now, how are the risk factor summation? This is too much of a simple method. What you do is, if you are well placed, put +2. If you are okay placed but positively, +1. If you are neutral, put 0. If you are negative, -1. Very negative, -2. And just take a total of that. And based on that, you may decide where are you placed in terms of the. Okay. Sundarajan, about the economic risk and petrol prices, we have a risk in the deliveries and the prices are increasing, and even the logistics has suffered a lot. So not only the startups, but the whole of the industry is suffering. I will have to keep that analysis for some other lecture because that is the topic by itself. Credit rating report used by the for bank borrowing, yes, but frankly, startups are such where bank borrowings are not easy to come. Okay, we are talking about startup valuations, where more the SoftBank or Tiger Global or Carlyle, those funds come in. Now, instead of the normal bankers in India coming in, is not possible. Why these people come in is a question by itself. We will answer that later. Let us come to venture capital method. Okay. Now, how do we arrive at the pre-money valuation for startups which are yet to generate revenues? Okay. Funnily, this method was brought in 1987. And interestingly, this is the most famous method even today because it is simplest. Okay. And it was brought by Bill Sahelman. Okay. In fact, some of you who are interested, on 22nd, you can join for another lecture, which is free. Okay. And that is by a person who is studying in Howard University. Anyway, so the venture capital method, these are the formulas. But you all know, if we remember formulas, we cannot solve any questions. We need to have practical. Now, venture capital method, there are 3-stage valuations: mentoring, funding at right stage, pre-revenue, and revenue commence gradually. This is where this method is useful. Whereas post-revenue, normal methods, like in our language, DCF. Okay, CAs at one time were knowing only DCF as a method. How many years company or business is considered as a startup? You will get the answer. Okay, you will get the answer. Okay, in this example itself. So how is the revenue graph of startup? Okay, let me see. So here is a revenue graph. Yeah. So revenue graph, this is nil or negligible. Then this is gradual commencement, and this is sudden jump. So this is phase 1, this is phase 2, and this is phase 3. Okay. After which it may grow at a normal rate. Okay, where we have this terminal value and all such concepts. But challenge lies in these two. In fact, there are people, many valuers also come to us to tell us that, look, we have got a startup valuation assignment, can you help us? Okay, you are not able to see the graph. 1 minute. Let me try to do something. Just give me a second. Yeah, I will draw a bigger graph. Okay. So this is stage 1, this is stage 2, and this is stage 3. So this is stage 3 where you use normal method. This is stage 1 pre-revenue, and this is gradual increase. Is that clear? I hope this graph is clear. Okay. If you need it in a different color, is that clear now? Yes. Okay. So we go to the next point. Here is an example which I would request all of you to go through for a minute and tell me your comments. Anybody can answer me. Your answer should be in percentage stakes a VC will achieve. Okay, so here is a quick self-learning exercise. And you have sharp 2 minutes, and we are, the audience is chartered accountant, which is supposed to be the most intelligent professionals of India, which is merit-based education, no reservations. And plus, I'm talking to a study circle in Mumbai, that too Andheri, where Andheri is the area where maximum education hub is there, and maximum rich people also. Yes, I'm waiting for your replies by unmuting or by chat box. High expectations from my audience. Anybody needs more time? Do you need more time? I've written in the chat box whether you need more time. All right, then I will use the sweet words which every teacher uses, saying that somebody has replied 75%. Fantastic, Surajji. Okay, so let's go to the answer. Okay, the answer is here. 100 is the investment, 33% compound growth for 5 years. So 100 into 1.33 raised to 5, 416 is what the VC wants valuation. 200 is the 5th year profit. P ratio is 8. So total net worth value at market or market cap is 1600. So the expectation will be this divided by this. Okay, 26%. Are you getting my point? 100 million is the investment expected. 5 years is the time after which you start making 200 million profit. That is that 3rd year peak point, like I said in our graph. This is the 5th year end. Okay. And the PE multiple of peer group is 8 and they want 33%. I have taken an Indian example. In the overseas examples, this is normally 20%. Okay. And this is taken as normally 6. Now the question is, these startups, how many assumptions are correct? And what does it mean? So 100 is the figure which is called zero-based calculation of business development cost, software cost, whatever you need. 33% because it is equity return request required are higher. 5 years is a judgment. Like somebody was asking, how many years required, expected to reach the stage 3? 5 years. But have people succeeded in 5 years? Sorry, no. Byju's took 8 years. In fact, most of the unicorns, till they came to the last round and generating good revenue, I'm still not coming to profits. Good revenue, they took around 7 to 8 years. But this is an example, so I'm taking 5. Then 200 is the profit expected. Yes, of course. This is something the entrepreneur promise. So right now, what entrepreneur has to convince. So if you are a valuer for a startup entrepreneur, he will say, Mr. Bhave, calculate the valuation of mine, which will show this much profits for the last year and giving this much market cap. If he is imposing upon you, but if you are wanting the zero-based approach, if this doesn't come correctly, then you will have to question either 100 or 33% or 5%. I would strongly recommend you to study, go through that Shark Tank. That is that program on Sony, right? Shark Tank. So do study that. That's a very interesting learning for valuation. I go through that every time. Now, how this is called carrot and stick theory. 8 years is taken from peer companies. 33 is normally equity market expectation in India. 5 years is the startup expectation. Nowadays, people have moved to 8. And 100 is your cost calculation. Based on that, a beautiful presentation is done by the startup entrepreneur and Mr. Bhave, the consultant for startup advisory and the valuer. And they show that you will get 200 as a profit in the 5th year. And if so, if I get 200 profit, I will be giving you the equity stakes of 26%. Now, how this is carrot and stick theory? If the entrepreneur achieves 400, then this will be 3200. And if this is 3200, this will come down to 13%. So the entrepreneur will gain because he has performed better than what promised. He gains because the equity offered to the VC is lesser. On the other hand, if he fails and he comes to 100 only, then this will come to 800 and VC will capture it because they will get almost 52%. So this is something 200 has to be compared later on, budget with actuals sort of thing. Am I clear on this model? Why not 4 years, 5 or 7? I mean, there's no answer for that. Okay. Why not so much? I mean, it's like that. You can say everything has to be based on probabilistic assumption. Okay. It's like saying that what is the capability of that and what is our estimate? It's not necessarily 5 years will be correct. You can take 8, you can take 10. But finally, you have to convince the VC also. You take more the number of years, VC may not be happy. If you take less number of years, there is a chance of failure. But 5 is not the sacrosanct figure. Okay. So here I am explaining you some of the fallacies in this model. 1, initial 100 crore investment is never on the first day. Okay. I know in Ola Cabs, they gave milestone based investment. Have you reached 10 lakhs web app downloads? Take 10 crores. Have you reached 100 lakhs web app downloads? Take 100 crores. Have you reached taxi driver signed 50,000? Take another 200 crores. Have you completed the daily rides at least start at 5,000 rides per month, take another 200 crores like that. But for the example's sake, I have taken the simpler one. Otherwise, this is a complex model in order to consider the returns. Then, so as I said, spread on milestones. Now, a startup value or skill lies in how is he able to find out those milestones, discuss with them, and propose to a VC entrepreneur. So, generally, yeah, Suraj Rajan, you're right. 75% is something which most of the Indian venture capitalists wanted. So founder generally becomes a CEO and employee, and perhaps you're listening a lot of stories that of late many of the founders are rather getting out, but they make big money. Then this is one-time investment. Okay, so the model is too simplistic. Then what are the other fallacies? PE ratio. Now, if the model is unique, how can the peer company be available if it is a startup venture? Then, as I rightly said, many times it gets drags beyond 5 years. But what is the beauty of this? Good part of this is flexibility, carrot and stick theory. Then this is a normal desire, and 5 years is compounding. And unlisted companies, difficult to have valuations. Look at OYO. OYO, because of the corona, got dragged. All right. Now I go to the ownership method very quickly. Okay. That is to value a startup. So that is depending upon the how much we should own at each stage of funding. I will not explain this because you go by the elapsed time and take to the new pre-money round. Now I go to First Chicago method. There is a bank called First Chicago Bank. Okay, the First Chicago Bank particularly wanted to buy an arm which was a forfeiting arm. I'm sure you are aware of forfeiting. Okay. Forfeiting is securitization of debt without recourse. And when they wanted to value, the value depended upon the probability of the debtor's collection. So the factoring arm requires a valuation in the three methods: base case valuation, base, and worst case valuation. And then you assign the probability and come to overall valuation. This was found in 1970 by the equity group of First Chicago National Bank. And then they make the comparable multiples. This is useful for second stage startups because you cannot have, first stage startup based on this, because first stage startup generally may not have comparables. Okay. So as I said, optimistic, pessimistic, balance, etc. If you want more details, go to this website, corporateevaluation.ca. CA means California here. So you'll get the information of this product. Comparable method, these are very commonly used ratios: EBITDA method, PV multiple method of the precedent transactions. So you will check the first round, second round, what was the ratio that time used, and based on that go for. A GMV model is quite popular. DCF, you are all champions, perhaps more than me. I will skip that. Cost to duplicate, we discussed. So I will leave that. Book value, I will leave. Right. Now, before coming to the Reliance model, I will discuss some of the points in next 5 minutes, and then we will go to my luck. I was involved in a startup's valuation. The startup word was not popular that time, but I will come to that. As an employee or as a head of business strategy, how it was worked out. Okay. So which are the decacons in India? That is 10 billion. Worth reading those stories: Paytm, OYO, Byju's, Flipkart, and Swiggy. I was lucky to give them the advice on IFRS in 2010. And that is how I learned their model of business much earlier. Okay. Then OYO, Byju's, Flipkart, Swiggy. Swiggy story, I'm sure you are aware of. They went to KFC Now KFC, you know, Kentucky Fried Chicken, and normally any KFC's outlet has 2/3 area as a dine-in, and this is kitchen. And when Swiggy started negotiating with them, they said, look, we want you to start cloud kitchen concept. What does it mean? You will not keep the dine-in area. Okay, you will not keep the dine-in area. And what was the agreement reached? We commit to make your revenue 6 times. 6 times the revenue committed. But no dine-in. Okay. And the rent saved for this area will be given to us, to Swiggy. Okay. And then Zomato also signed a similar agreement with. So some of the unique ideas you will have to come to. So for example, Ola Cabs agreement with taxi drivers, if you see, it even says that tomorrow if I put JK Shah's advertisement on your taxi, the revenue from that advertisement is mine and not of the taxi driver. So you will see soon. Then if you want to see one of the security and financial assets, then you can go to these references. IBBS study material, if you see, my name happens to be there. Okay. Let's talk about Indian unicorns. 7, 12, 9, 10, 42, and now 14 already in 3 months. Okay. So that's very interesting. Total 94 so far. There are little bit here and there figures, but despite Corona, 42 was achieved, a big jump, and now 14 in 3 months means we are easily going to cross at least 50. Some people say we might cross 100. Unicorn means 1 billion valuation, $1 billion. So these are the names, and we will not discuss those models. We will only discuss where there are interesting stories. Policy Bazaar, I am sure most of us are taking the insurance cover through Policy Bazaar. If not, then we are giving a donation to agents. So the smart guys do Policy Bazaar, and therefore they save a lot of money. Okay. Oyo rooms. What was the Oyo room model? 3-pronged valuations. One valuation was, I can sell even for 1 hour. So day is not my unit. Day is not my unit. Okay. Because normally when you go to hotel, first crying is, what is your checkout time? Can I keep my bags in your reception? Nothing like that needed. Okay. Even if you are sitting in front of the hotel reception, still you will find the Oyo will be cheaper. Okay. So sell in our lots. Second part is that huge discounts. Huge discounts. Why? Because they promise 100% occupancy, or say 70%, 70 to 100% occupancy as against current occupancy of 30%. So what are we talking? Underutilization of tangible assets, whichever area it is happening. For example, kitchens of the hotel were underutilized. The capacity was underutilized. The waiters were only waiting, so they were underutilized. And on the other hand, okay, there was an unemployed population who were ready to work as a delivery boy, and there was a customer who was waiting for buying. Let's say recently I ordered Apsara's ice cream. Apsara is the best sugar-free ice creams. So I said I never thought of calling something from Santa Cruz. Okay. Or Oyo, the tangible asset hotel rooms are grossly underutilized. Or Ola cabs, the taxi driver works for 8 to 10 hours, of which half the hours is empty. Whereas now the same taxi is used perhaps in 3 shifts and has at least 70-80%. So Ola, Oyo, Swiggy are the 3 classic. So any startup valuation you do, you find the pain point as underutilized tangible assets. underutilized tangible assets. Okay. Then you will find your great business model. Okay. Now we are not getting into the the startups aggregators already existing, like Naukri.com, like Matrimony. They were already there. And even Dabbawalas, one of the biggest aggregators at one time, though that was physical, not digitized. So Oyo rooms, they were able to sell 1 hour. Then there is a big class who wanted to stay in a hotel, but now they were not staying. They were, let's say I want to go from Bombay to Delhi and Delhi to Mumbai to Delhi and Delhi to Mumbai. I will generally avoid staying back. And though it is giving me a pains, because I don't want to travel in the morning, evening. But still I say, oh my God, hotel fare is very high. Because nothing is less than 3,000 in Delhi. And now you find the same place you get at 1,000 rupees. So the occupancy started increasing. Okay. So there are many factors which one needs to work on. Whenever we do startup valuation, we do the valuation by taking minimum 8 variables. Minimum 8 variables. Then Byju's, Quirk, Buildesk, now Ola, this is called horizontal development. Ola to Ola Electric, or let's say now Jio is going for handset manufacturing, or Uber went to Uber Eats, or Pharmacy went to Thyrocare. So can you have vertical and horizontal integrations? Okay. Now delivery from Delhi came as a surprise to become a unicorn, because they started promising now delivery in 1 hour, which was shocking, Rick. Then you must be knowing WIRC and WeFast. Now these are becoming threats for traditional couriers, because traditional couriers have their own whims and fancies. We will do this, we will not do this. If I want a signature on a document of Jatinder Kothariji, WeFast will do it for me. But if I tell a courier, he'll say, sorry, jaldi se jaldi pahunchega Friday ko, and I will not get it back for you. Cars 24. In fact, in January 21, I sold my car. Okay. Ford EcoSport. You won't believe such a smooth process. What is the pain point? A scientificness, a digitized, a car owner generally has a very limited time to spend on such unproductive negotiations. So that is the pain point Cars 24 identified. Razorpay has beaten everybody. Okay, why? Because the pain point is that I want money from credit card, and then what do I do? So Razorpay made the money based on that. They charge only 1.99%, whereas even you go to the best of the banks, they will give you an offer of 3%. Unacademy. No, this is where another thing we have to learn in starting startups. Always give a name which is non-traditional. Why? We always say academic education is great. And these people say unacademic. We don't want to be academic. We want to be practical. Okay. Now, I'm sure Byju's also you are seeing the advertisement by Shah Rukh Khan. Okay. Nykaa, the Falguni Nair made history. All right. I will create, I have discussed, Frame I have discussed. Blackburn, Room, Bharat Pay, we have discussed. Upgrade, Grofers, MPL. Car Dekho is another, no broker. Currently, you know, paying a brokerage to buy any person or a bank is become a problem. Unacademy is on the way of closure, Unacademy is on the way of acquisition. Okay, so I'm sure you must be knowing the history. Okay, Santoshi. In fact, many of the entrepreneurs start themselves to get acquired. So don't worry about their faith. Then 2022. Of course, this list you will get. So I'll go to the example now directly. Okay. Here is the link. Okay, this is up to date as of today. Ventureintelligence.com, Indian Unicorn Tracker. You can click this and get the details. Decacons of 10 billion. There are 5 now. You go to qz.com, you will get the details. Hot IPOs, we have already seen 6 have happened. Hot IPOs, in fact, 8 have happened. So with that, I will go to the example straight away now. We are not going into the challenges. Burke's method I have already talked, proud of Dabbawalas. These are the various areas where you will get startups. InsurTech, JobTech, WealthTech, RegTech, Legal Tech, Food Tech, FinTech, EdTech, MedTech, PropTech, FemTech, CleanTech, GreenTech, Biotech, HealthTech, MadTech, Retail Tech, AgriTech, Fashion Tech, HR Tech, PR Tech, MarTech, and AdTech. All right. So before concluding my lecture, I will take an example where I was involved while doing the business strategy, which those days was not called as a startup. But the privilege to work with Mukesh Ambani in 2002, wherein one day, let me go to my notepad for the time being. Are you able to see my notepad?
Yes,
Which
sir.
shows you my WhatsApp number to contact anytime. Can you read it? Are you able to read it?
Yes, yes, sir.
Okay, okay. So the question is, one day I mean, after I came back from USA, joining Foundation Software in 2002, I joined Reliance Infocom. Okay, and I was holding a position of business controller. And then Dhirubhai Ambani called us. And Dhirubhai Ambani said, Mr. Bhave, you are doing the budgeting also for our venture, telecom venture. That time Mukesh Ambani was handling it. And Dhirubhai was there for first 3 to 6 months, I think. That's all. So if you are handling this project, what is your budget? Budget means quantitative numbers. So I said, look, today we have 2.5 crores landlines and 0.5 crore mobiles. Okay. And these have happened from 1995 mobiles to 2002. 7 years and 7 companies have taken to reach a figure of 0.5 crore. And being Reliance, I would say we will achieve that in the very first year itself, 0.5 crore. And second year we will have 50% jump. And the third year we will have another 50% jump, reaching to 1.1. Okay. So he was saying, have you read the Coke story? Now, generally, whenever your boss says, have you read something? You can neither say yes nor no. Because if you say yes, and then he asks further questions, your ignorance is challenged. And if you say no, then you are looked upon like a fool key. You don't have a updated reading on business strategy, because at a head of business strategy level, you need to have all that. But that way, Dhirubhai and Mukesh Bhai are very practical. Dhirubhai said, go today, read this book, and then come back tomorrow. Now, I don't know how many of you have read that book, but when Coke and Pepsi used to have cutthroat competition in USA, okay, reports used to be produced that 16% is Coke's market share and 15% is Pepsi's market share in October. 15-year, this book is now 30 years old. Then 17% and 16.1% November. And then 17.3% and 16.8% December. Let us celebrate. We have beaten Pepsi in this quarter. And then all the vice president of each state, there are, I think, 56 states in USA. They come together, they do Daru Sharu, they enjoy, and then say awards are given for various vice presidents. One day, this CMO, Chief Managing Director or Chief Marketing Officer or Director, becomes CEO. And then he says, I don't want these statistics. Now, funny part, the people start asking him, when you were marketing director, you accepted it. Now you are an executive director, you say no to that. You are becoming president and you are telling this is of no use. So he told them, you know how we were making the figures. Statistics always is nice to cheat. So you tell me, in a non-alcoholic products, okay, what is the market share? What is the market share? Now, when it was calculated, it was found that water has 60% share and Coke has 12%, Pepsi has 11%, and the balance are others. So he said that, look, start competing with water. Okay, start competing with water. And when they said that start competing with water, what is the difficulty? They said price. So Pepsi was $1, water was $1 and Coke was $1.1. He said, bring down the price immediately to $1. And he said that, what is the next difficulty? He said that, look, the next difficulty is availability. If you go to the Empire State Building, then you have on the 102nd floor, there are at least 500 water bottles. He said, go and dump 1,000 water bottles. So every corner of USA, dump Coke bottles, which are double of water. Availability, let it not be constrained. And I am ordering production to be tripled. Let it be abundantly available. As it is, our variable cost is very low. And in a very short time, they reached a position of 28%. And Pepsi, realizing it later, reached only 20. And after that, 30 years have passed, but Coke is always ahead of Pepsi. And one strategy to compete, not with the cold drinks. Why? Because why people drink Coke? Thirst. Okay. But in past, the answer was, oh, it is better than Pepsi. So we will have to remove those kinds of blocks in our mind. So similarly, instead of Airtel competing with BPL and mobile and all that, he said that compete with postcard and get the market share from there. And since postcard is costing 40 paisa and we want to recover 10 paisa for handset recovery, handset cost recovery, we will have 50 paisa per minute. Okay. The call costs were 16 rupees, 8 rupees, 4.5 rupees, 2.5 rupees, 1.5 rupees when Reliance came. But we said that we'll go to 50 paisa. 1/3 the cost, 3 times the market. So if teledensity is 3 crores, now it will make it 9 crores. And Reliance follows certain principles. For example, 60% market share. So we said that we must at least achieve 5 crores. So 5 crores in the 3rd year. Okay. I'll show you the statistics in my slides now. Yeah. So the per minute charge will come down from 1.50 to 0.50 immediate effect. Market size is expected to go up 3 times. So 3 crore phones will become 9 crore by 3rd year. And we will achieve 60%. That is 5 crores rounded off. Payback should be within 3 years. utility industry should be 50% EBITDA. And we will say year-on-year growth 2.5 times. Then there was a survey taken of all the 1 lakh Reliance Group employees. That is, if you get a mobile at you are to pay personally, then how much you will talk per day? That time people hesitantly give the answer 30 minutes. So 30 minutes into 30 days, 900 per month. But we said weekend we'll talk more, so 1000. Then INR bill 50 paisa. So per month 50, per annum 6,000. And 3 crores becoming 9 crore in third year means 5 crore. 5 crore into 6,000 is 30,000 crores. 2.5 times the growth each year means second year is 12,000 and first year is 4,800. And then we said, therefore, EBITDA of the 3 years will be this much. And our purchase heads were told that CapEx should be restricted to 3 years EBITDA, 23,400. This is how the budget made by 15 people in my team for a period of almost 6 months culminated. I'm giving you in a very capsule mode. There were different denominators and numerators and variables considered. So here is the projection summary. Okay. 9 crore, own share 80 lakhs, 2 crores, 5 crores, 6,000, because this is 2.5 times. 6,000, 6,000, 6,000. Revenue is showing EBITDA and CapEx. Is that clear? Would you like to see the slides again? Take a quick look for a minute. All right. Have a look at this also. It appears to be too simplistic later on, but while breaking our head, we found that the teledensity of the developing countries was 9 to 16. Today, this story is forgotten and replicated in Geo, because after 3 years, Mukesh had to hand over. And then have a look at projections versus actual. What happened? In the third year, 9 crore actually became 20 crore. And market share, instead of 60%, Reliance achieved 25%. 80 lakhs was done, 2 crore was done, 5 crore was done. 6,000 per annum, yes, we achieved it. Revenue was also done. And then EBITDA was also done. And then CapEx also was successfully managed. That CapEx, how it was managed, is another story by itself. So you can imagine that startups, can you start with some of the yardsticks on EBITDA projected period? How do you compete? Which is the pain point you are going to compete? Are you going to, what is phone? Mobile does not mean that competing with other mobile holders. Mobile means communication, and which is the highest communication. Like we say, Coke means for quenching thirst. Similar way here, phone means communication mode, and post office is the most maximum used communication mode those days. Okay. And even perhaps courier. And here was the big bang strategy as discussed and finalized. Others were into prepaid. We said we'll go for postpaid. Others were targeting classes. We targeted masses. Others wanted to do branding. I remember I was in Blue Star in 1997. And the first 10 mobiles given were to our Blue Star's managing director, Sunil Advani. And his photo was there on the Business India. Okay. The Coke story. The name of the book, The Coke Story. Okay. Reliance wanted to convert it into a commodity. So Reliance always says that I will commoditize. Today also when we say, oh, cable TV, forget cable TV, everything will come by fiber. And it will reach to the middle class or even lower middle class of this country, that data plan will prevail over it. Okay. Now we have a journey from voice to data to voice. Because voice means what? Voice does not mean that the other person should be there to hear. I just put a voice and say, wow, done. Then cautious. We said, okay, we will take the risk of bad debts. Then others were targeting rich people. We said we will target poor people. And people started laughing at us. When I presented the budget, people started laughing at us. Do you know, Mr. Bave, when poor people will buy, they will never pay you. I said, what is the percentage of bad debts you want to see? They said, you BPL has the 7.5% bad debts. We will have 10 or 15%. I said, you took 30% bad debts and still you will make money. Huge money. Okay. Then they were putting incoming chargeable. We made it free. That is how in India, the missed call concept came. Because incoming became free. Okay. Sundarajan, I'll take your question separately. Because that is not necessarily only on startup valuation. Then SIM versus RIM. Do you all know what is the difference between SIM and RIM? RIM, you cannot pull out the SIM card. You cannot pull out the SIM card. I'll show you the SIM. I still preserve this mobile. Are you able to see it? Can you see it? Here there was no SIM card.
Yes, sir.
Yeah, and I have still preserved it for 20 years. So this was the first mobile phone I had, and we bought it at what price? Don't ask me. But this mobile, you cannot remove SIM card. Now what happens? Some person, poor man, what will broker go to him and say, take this 100 rupees and take this 100 rupees and sign this form. And still I will get you a mobile. He says, great. He gets the handset. The broker comes to Reliance and says that 500 he paid and 800 is my commission. So give me 300 for putting this form with you. Shocked. For filling up the form, the broker gets 300. So broker is motivated. The poor man is happy. He gets the handset just by filing the form. Now he knows that he cannot pay the bill. He speaks for 1 or 2 months, does not pay. Nobody goes behind him for recovery because it's a small bill. He goes to Chor Bazaar and sells it. After selling it, what happens? The other party, other person, he is also perhaps a poor man. He starts using it. Now, if he has to use it, the phone is working, not an issue. Okay, because we are not barred it. Now he doesn't pay. He goes and sells it for 300. Likewise, any new person coming in, however, cannot change the telecom operator because there is no SIM. So therefore, finally, somebody will buy it, maybe at 100 or 50 rupees and start using on the Reliance network. So maybe within a 6 months or 1 year's time, you can start getting the returns. Others went for premium pricing. Reliance went for penetration pricing. Others went for premium handsets. Mukesh Ambani went for low cost handset. Others went in a phased manner. Reliance went in a big bang approach, 18 commercial circles together. Others went for GSM. Reliance initially went for CDMA. That is how they could get the license also. All right. Okay. Then here is the story of customer acquisition calculation was done. We said we need 80 lakhs customers calculation. And our experience is if 3 people come to inquire, 1 buys. So I need 3 times the footfalls. Okay. I need 2 crore 40 lakhs customers coming in. How much time per customer my salesman should spend? 15 minutes. So 240 divided by 0.15, I need 60 lakh hours of my salesman. And if I put 4 salesmen per web store and excluding cashier if they work for 8 selling hours, and we have rotation, so 365 days, we need to set up 514 galleries, and they were set up, I would say, within 1 day to 1 month's time. 500 stores were set up and 80 lakhs customers were gathered in a manner of 1 month's time. So that is how the Reliance story. That time I didn't know the word startup, but I learned one thing: you have to do something unconventional. You have to have some kind of quantitative yardsticks which are projected, and none of the business model of the others was copied because they were at a heavy cost model, whereas we went for the commoditization. And this is the advantage of aggregators and sort of. So I would say later on, due to their agreement, brothers, Mukesh Ambani had to hand over to Anil Ambani, and we know what happened to Infocom. And there was a non-compete agreement, so Jio took so many years. All right. This valuation I will not discuss, but this is actually Ola cabs and taxi for sure. Brand, customer relationship, supplier relationship, license, website, web app, and GPS app. These were all valued by us. Then we come to the valuation of pharma easy, where population, medicine, number of shops, number of doctors, number of bee farms, cross-selling. In fact, when we are doing the valuation, we asked Dhaval Shah that if you are allowing people to buy something from medical store, 50% of the stores are medical and general stores. So if I want to buy a toothpaste also, can I buy it through Pharma Easy website? He said, certainly yes. Then I said, why are you not showing that? So then we decided that we will consider the GMV of not only the medicines, but also of our regular use, because nowadays medical shop sells whatnot, cool drink, chocolates, toothbrush, shaving creams, etc. And then cities to cover. Yeah, I think I'm done. I don't know whether I went very fast or very slow, but this is what I had planned for today. I took a little shortcut in the Reliance model, but I am sure all of you will know. The next model which is expected is in the housing. People they are encouraging kitchen not to do. So Swiggy and Zomato are in discussion with property dealers and property builders, saying that stop doing kitchen. We will give you the food mall free on the ground floor. Delete the kitchen word from dictionary. Okay. Yeah, I think whatever I had planned has been done. Okay. So any questions here? Here, website is here. And WhatsApp is the best mode to commute. I have completed. Yes, open to questions. I hope you found it useful. Can you also share the example of valuation report which are grossly wrong or varied? Puniji, thank you. Any views on Paytm valuation? Paytm valuation, actually, we had held a special webinar on that. In fact, not webinar, it was a panel discussion. I will send you the video link of that. Primarily, I think the Paytm overvalued themselves arising out of the greed which arose after Zomato. Okay. And that created a problem. So post IPO, this was expected. While I subscribe for Zomato. I never subscribe for Paytm. We had that judgment before. Turnover based X multiple used nowadays valuation. How do you see this? Obviously, because we are on a GMV model, gross multiple. Say, for example, Ola cabs. I mean, these are the days of 5% service tax. Ola cabs was charging 500 as a ride fare, 25 as Ola's share, and 25 as service tax. So total 550. Now, are you going to calculate only 25 as Ola's money as a valuation? You can't, because you will have to go by the gross multiple, how much the economic GDP getting created. That is how it can happen. Rajesh ji, thanks a lot. Yes, please. Anybody else ask the questions? Shagupta, thank you. Nice to meet you here. Yes. Any queries, please ask. Of course, they have to be short because we have 2 minutes left.
Sir, am I audible?
Yes, yes.
Sir, I'm Soundarajan. Sir, firstly, thanks. It was a great session for us and great learnings, and the amount of experience what you carry along with you is something which is, I don't think is comparable or something. So that's something great to learn from you. And I just have one question, because I could see today, again, going back to my question, because a lot of people are doing the valuation on a turnover basis, X multiplies, and then base which people are doing investments. But then the amount of risk what runs in that is I'm unable to understand. What is the risk or a calculation which the investor is taking? Because a lot of people are going with that multiplier, and after a few years, the multiplier gets changed, or the way in which the business behaves gets changed. But how do you see that today, and how do you see that it will end in the long run?
See, do you know in USA, they call big is beautiful. Okay. So unless you make it big, it cannot become. So when some of the startup entrepreneurs go ahead with the assumption that they will succeed, in their heart and mind, their success means creating a value which can get acquired. So it's not necessarily that they are themselves planning to become big, because they have their restrictions. Okay. In fact, I'm into the edutech sector. We already are catching up with some such kind of challenges. And therefore, a startup created with the angle of getting acquired is also not bad, because you know how much money people got, including, for example, the thyrocare which was paid, or the taxi for sure which was paid. So no harm in that. So if you look into the angle of whether that venture startup was successful, 10 to 20%. How many startups failed? Again, 10 to 20%. So what happened to middle 60? They got acquired at a very good value, because it is the idea which gets paid. So I would say, in my eyes, startups are succeeding 70 to 80%. Okay. Because getting acquired at a good value created by the economy and society is very important. And India's strength, which is population, originally we used to call it weakness, but now a strength which was useful in IT services. Similar way, now it is becoming very useful service for the purpose of ensuring that needs, basic needs of theirs are catered. Am I able to catch up your question rightly? And another part is, this SoftBank and Tiger Global. For him, Indian currency is so weak that it is peanuts for them. For example, when I go by auto and the fare is 29 rupees or 28 rupees or sometimes even 25 rupees, and I give him 30 rupees. Do you think if he doesn't have a change, we even wait for that change? We don't. Why? Because our time is certainly precious, more than 5 rupees at least. Okay. And more so if you are a Andheri Oshiwara study circles rich chartered accountant. Okay. So similar way, these are all 5 rupees for SoftBank. And they very well know that Venture means what? Adventure. Adventure means what? Not all the adventures become successful. 1 out of the 10 adventures succeed, and that make billions. Done. Your valuation is done. And many of them you are seeing via IPO, they are getting out of their stakes. So that is another smart move. Okay. So everybody is looking. You read the valuation material of CA Institute. The first page says, what is valuation? Your valuation is that if you can find a bigger fool to buy it at that price. Okay. So I originally used to get worried, this GMV model startup, is it going to be a, like people say, .com bust. The .com bust happened, but IT industry flourished, right? So similar way, perhaps you will see it as a startup bust, but you will know that there are many rich guys with ideas will get created. For the first time in my life, in last 10 years, I'm seeing that Saraswati, Lakshmi has started following Saraswati. Let us put it that way. Otherwise, I remember, especially pre-globalization, it was Saraswati who used to run behind Lakshmi. Now Lakshmi runs behind Saraswati. Therefore, the professionals, chartered accountants like us, can add a great value to nation as well as ourselves. I hope that covers the answer. Yeah. Sureshji, thank you. Presentation will be sent to Jatinderji and then he will pass on to you. Handed over to you, sir, Jatinderji.
Yes, I will post in WhatsApp.
Yes, Jatinderji, I have concluded because there's no further questions. So over to you.
Yeah, it is a very nice presentation, sir. And all the practical examples which you have done in your life, like Reliance and all these things, you have present very nicely. And I think all the participant is benefited, and the inside story of the startups is also benefited and learning for them. Now I request to see Utkarsh Sharma to give vote of thanks on behalf of Oshiwara, Andheri Oshiwara Study Circles. Utkarsh. CA Utkarsh Sharma.
I have posted my digital card in the chat mode. So anybody wants to have that, you can download and take it.
Actually, his video is showing on, but we are not able to even see him. Some technical issue maybe. And he's not unmuting also.
Hey, the presentation has been.
Yeah, he has come here.
Stop sharing. Oh,
yes,
you got the digital card?
Hello.
Yes, Utkarsh, you are audible. Go ahead.
Okay, thank you. Thank you on behalf of entire Andheri Oshiwara Study Circle. I would extend my vote of thanks to Mr. Rammohan Bave sir. I had the opportunity to listen to him in my 30 years valuation class as well. It was illuminating then and now as well. And with your enriching experience, sir, we more and more fellow chartered accountants would want to try this. And as you have already mentioned, if you want the cherries, you have to enter this field. So thank you so much, sir, for taking out time and explaining us the nitty-gritties of valuation. Thank you so much.
Thank you, Utkarsh Sharma. Thank you, Rammohan Bave sir. There will be a physical seminar on 17th Sunday on the understanding the IBC and opportunity for CA by CS Snehal Kamdarji and judicial pronouns under IBC by CA Rajan Agrawalji. The post and flyer will be posted in the group in the due course. Thank you, members. Anything else? Aditya?